Everybody on Global Wall Street has one question for you right now, and that is dollar dynamics. Bring up the chart, folks. And this is a beyond elegant chart with what, well, Chairman Bernanke, among others, would call a hockey stick down in the lower right corner. Dollar, the big surprise bear market, the weakness of the dollar through the summer, and up we go. Is it for real? Is there dollar strength at this moment?
It's for real because it's just reversing a lot of extreme pessimism that really dominated the market.
Can you trade it right now? Can you trade long dollar?
Clients should be slightly long dollars because I do think there is an inflation revival in train in the U.S. I do think that's going to cause the Fed to deliver the dots, and that to me is going to push rate differentials more in the U.S.'s favor. I think there are limits to this. It maybe is only another 2 or 3%, but I think it is tradable. How
would you express this right now without going into butterflies and condors and other derivative instruments? If I want to be long dollar, how do I place that bet around the many currency pairs?
Keep it simple. I'd say you want to be long dollars versus commodity currencies and some low yielders, except the yen. The yen is the one I'd leave out of this because of the political dynamics in Japan at the time.
All right, John, this is critical. You say this is a reversal on negativity on the dollar. What's the optimism? Talk to me about why we should be optimistic about dollar.
So I'd say there's some ordinary reasons and some extraordinary reasons. The ordinary reasons are simply that inflation is starting to normalize in the U.S. That makes the Fed's dot profile look a lot more credible. That's something that's not priced in the bond markets right now. And I think the bigger call you have to make is whether there's something extraordinary happening on the U.S. in terms of fiscal policy. Is there going to be sufficient cuts on the tax side that should make the interest rate market sell off on a trend basis over the next year? I'm not that optimistic you're actually going to see Washington deliver material tax cuts. That's why I think the move up in the dollar is just a couple of percent.
Oh, what's material tax cuts? Is there a benchmark? So let's say the dollar moves if you get 15% or 20%?
So I think if you had tax cuts that would provide at least half a point of extra growth to the U.S., you could call that material. That is probably enough fiscal stimulus to make the Fed certainly deliver the existing dots, 3 hikes next year, maybe even more than that. And I think if that's the kind of tax cut you would see, the dollar would make new highs back above the levels it peaked at in January.
All right. And how do you trade it against euro?
I would say fairly tactically, because even though there is something important going on in the U.S., I think it's important to remember that the ECB is normalizing policy. The bond market is much more overvalued in Europe than in the U.S., and so I think, ironically, you still have more scope for German bond yields to rise over the next year than Treasury yields.
And yes,